So this is the move where gold retail traders got trapped. So let me break down exactly what happens step by step. This is a motive wave. This is a three-wave expanding flat corrective structure, and this is the third wave. So everyone, especially Elliott wave traders, some are conditioned in their mind to short at a breakout, because a breakout of a corrective structure means that we are now in a third wave, and we may not even wait for a small consolidation before we short, right? Well, what happens is shorting at this level is really a trap, and I'll show you. So I'm going to start moving the chart, right? And we're going to start zooming in on this area. Now, if you look at the candle, if you compare candle to candle, it feels like there is still hope, because this could still be a potential flag. Yes, so there is still hope. And this candle, this red candle, looks powerful. And it's very reasonable to have that feeling. Okay. However, I'll show you how sellers can become liquidity for the smart money. So we know that, on hindsight, right now, that a lot of the sellers were trapped when price action reversed this entire down. So let's look at what actually happens. Right? This is something that you cannot see if you were simply looking at the candles. Right? So when this candle was coming down, we had hoped that price action would just keep going to the downside, right? But then look at the delta. Okay, you look at the delta, it was negative, 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 and then something happened. This means that the aggressive sellers here have now shifted. Well, rather the momentum has shifted to becoming aggressive, right? The aggressive buyers are starting to enter the market in this candle, as shown here, right? In terms of volume, look at this volume. This volume, this number 3K says that when there is this amount of volume, 3,000, the body of the candle is red, right? But now you look at this volume, it's also similar. Now I ask, where is my red candle? Because logically, if this amount of volume resulted in this body, in this full body, now I have the same amount of volume. Okay, let me just remove that. Look at this. Where is my red candle? We don't have it. And what we actually get is, this is actually a wick. Alright, it doesn't show here, but it's actually a wick. Alright, and you can see that there is a point of control right here. This one, a point of control right there. It means that if this candle were to continue up, a lot of sellers here are going to get trapped. They are going to be under pressure, and they are now liquidity for the smart money, right? They tried to sell because they saw the breakout, but guess what? Because they sell, smart money will take their positions, they will buy, and then these people who are liquidity for the smart money are going to be future liquidity when they are stopped out. That makes sense. It's sad, but it's true. So this whole idea of this idea of price action continuing to the downside has to be taken into context, and order flow is one way to see it. All right. So I'm going to just draw it again. This is the first move. This was the corrective structure. This was a third wave, and this breakout here is a trap for the bears. If we took the sell, perhaps on this breakout, if we took the sell, well, consider exiting 80% of the position when you see aggressive buyers come in. Right? And I'll show you that scary scenario again over here. So instead of waiting for a flag, instead of waiting for a consolidation, consider taking off 50% when you see the delta start to change with such high volume as compared to the previous candle. Right? So I hope this helps you avoid the traps that the smart money set up for retail traders. Thanks for watching.